a stock that peaked a 200x ago. But how can Lucid regain investor confidence and secure their place in the evolving automotive landscape? Well, it isn't simple, but first let's dive into recent performance and key events. Lucid Motors, LCID, has experienced significant volatility in February 2025. On February 25th, Lucid stock rallied by 10% in after-hours trading, following the release of its Q4 and FY 2024 earnings. The company reported a revenue of $234.5 million for Q4, surpassing the FactSet consensus of $214.1 million and an adjusted loss of 22 cents per share, better than the expected 25 cents per share loss. Despite these positive figures, the stock closed at $2.45 on February 26th, marking a 14.3% drop from the after-hours peak, and year-to-date losses reached 19.04%. The rally was overshadowed by two significant events: the sudden departure of CEO Peter Rawlinson and an analyst downgrade from Bank of America. Rawlinson, who had been CEO for nearly 6 years, will transition to a strategic technical advisor role. Bank of America analyst John Murphy downgraded Lucid's price target from $3 to $1, citing concerns over the feasibility of Lucid's ambitious plans to scale production and launch new models by late 2026. Lucid aims to double its electric vehicle EV production in 2025, targeting around 20,000 vehicles, up from 9,029 in 2024. This increase is expected to be driven by the rollout of its first SUV, the Lucid Gravity, and the anticipated launch of a more affordable mid-size SUV, rumored to be called Earth, in 2026. The company's liquidity stood at $6.13 billion at the end of Q4, which it claims will be sufficient into the second half of 2026. Since its IPO in mid-2021, Lucid has struggled to meet its ambitious production and delivery targets. Initially, the company set goals of delivering 20,000 vehicles in 2022, 49,000 in 2023, and 90,000 in 2024, but fell significantly short, delivering only 4,369, 6,001, and 10,241 vehicles, respectively. This underperformance has led to a sharp decline in stock value, dropping from a peak of $55.52 in November 2021 to around $2.33 as of February 26, 2025. Lucid's reliance on funding from Saudi Arabia's Public Investment Fund, PIF, which owns over 60% of its shares, has been a double-edged sword. While it provides financial stability, it also raises concerns about share dilution. Despite the recent volatility, some analysts remain optimistic. Benchmark analyst Mickey Legg initiated coverage with a buy rating and a $5 price target, citing Lucid's strong technology and financial backing. However, the broader market sentiment remains cautious, with Lucid trading at an enterprise value of $7.97 billion, or 5 times its projected 2025 sales, which is seen as less of a bargain compared to more established players like Tesla. Lucid's performance and the reactions to its recent developments reflect broader trends in the EV market and the current economic climate. The EV sector continues to grow, with projections of a 30% increase in battery electric vehicles, BEVs, on the road in 2025. However, smaller players like Lucid face intense competition and pressure to scale up efficiently. The market's reaction to Lucid's CEO departure and analyst downgrade highlights investor sensitivity to leadership changes and skepticism about growth projections in a challenging economic environment. The reliance on Saudi funding and the focus on luxury EVs also underscore the complexities of navigating global economic shifts, including the transition to sustainable energy and geopolitical influences on investment. As the EV market matures, Companies like Lucid must balance innovation with operational efficiency to maintain investor confidence and secure their place in the evolving automotive landscape.